Yeah, Mr. Anil Kumar Jain joins us now. Mr. Jain, good morning. Thank you for joining us. I'm going to pick it up from last week's announcement. After that announcement last week about opening up the coal sector, could you share with us that have you got any feelers, indications or interest from any of the corporates that they would be interested in investing in the coal sector? Because Mr. Jain, when the sector was not opened, every corporate wanted the sector to be opened. Now that sector is opened, are corporate India or is India walking the talk?
Well, it is very early. What happened last week, as you allude to, was a decision by the cabinet to recommend to the president to issue an ordinance to widen up the segment for people to be able to bid. That was merely a recommendation. Since then, over the weekend, that ordinance has been promulgated. So the way has been set open for the laws to be weakened up so that, the restrictions that were there on who will be able to bid and get into coal sector, they were done away with. And only yesterday we have uploaded on our website the draft terms under which this bidding will happen. So these are very early days and things are unfolding.
So let's talk about the numbers, Mr. Jain. What sort of increase in production one should anticipate now for the Indian coal sector? And when do you think the whole purpose of this exercise, which is to increase investments in the coal sector and reduce import, when do you think we will see a on ground or on paper, migration happening?
Well, at the moment last year, we had produced 730 million tons of coal. And we are anticipating a marginal increase in that to maybe 750 to 760. The total consumption was 965 million tons. This year, we're expecting around maybe 1 billion tons. So by 23-24, if there is a robust increase in demand, let's say at the rate of 6% or so, we expect that the demand in 23-24 will be somewhere around 1.3 billion tons. And the endeavor is that this import which happened last year, 235 million tons, we should near eliminate that. We cannot eliminate all of it because some power plants have been based, the technology has been based on the variety of coal which they get from Indonesia and other places. And some coking coal, which our steel sector needs, of very fine quality, which India does not produce. So barring that, the endeavor is that India's coal production, which was 730 million tons or so, should quickly rise to maybe 1.2 billion tons by 23-24. For that, the Coal India already possesses the requisite coal blocks, coal mines, and some of the blocks which were given away in the last 2 years to the private sector, state PSUs, they will also be coming into production by then. But the fresh lot which we are bringing into the market this quarter, it will definitely take 3 years to 4 years to come into production.
Mr. Jain, good morning. You also had the paper on the auction of mines for sale of coal with 4% revenue sharing as the floor price. Can you give us some sort of an idea as to what has been the calculation of this revenue sharing model? Will it be a percentage of the final sale price?
Yeah, that is right. What happens is that there is no independent market, excepting for the fact that a small percentage, 15 to 20% of what Coal India produces, it sells it through auctions. So there is a scarcity mindset. Whatever price that comes out of it, it is a market-determined price, but it would not truly speaking a market price. For the market to be able to determine the true price, there should be ample supply and ample demand. There isn't ample supply at the moment. So when you are going to contract a party to give you a revenue share out of the total sale proceeds for the next 20-25 years, there has to be a transparent marker. To do that, we are in the process of building a coal price index. That index will determine the price which we will reckon for determination of revenue share. So whatever the coal mine, allottee produces in a particular year, multiplied by the price as would be determined through the coal price index, would be the top line. and he will have to bid at the present juncture when the bidding happens. What share of that he gives us, that is how the revenue share will happen.
Okay. My immediate follow-up question would be, Mr. Jain, that Coal India, every time we've interacted with them, they've said, look, we can increase our production, but the problem is that we don't have a very strong transport or a logistics network. So coal mining has been opened, but what about the logistics and other aspects which are important for coal mining? I mean, how will that be worked on?
I don't think that is a full assessment. The reason being that coal freight is a very important source of revenue for the Indian Railways. And they have been gearing up, to pick up whatever coal they can. There are bottlenecks for some destinations on some trunk lines. There are some trunk lines on which there is very heavy movement of passenger and other kinds of freight. There, if you suddenly tell them that please push 10, 15 rakes of mine, there may be some temporary issues. But the Indian Railways is always geared to develop, a third line, a loop line, a dedicated line, because this is dedicated business for them. Now, but you see, it's a same story that the two have to go hand in hand. You can't have coal mines opened up without, visibility on the logistics and vice versa. So there is always an interaction between the railways and us that what are the new mines which are opening up? What will be the throughput capacity? So those things will be taken care of. That's not a worry.
What will be the future of Coal India? Because minority shareholders are saying that if the sector is opening up, can a private sector and private sector companies coexist? Because the experience in banks, frankly, has been that when private sector has come in, they were able to gain market share because of efficiency and because of better capital allocation.
Yeah, but I don't think the two are fully comparable. Let us look at the coal market in India today. I gave you the numbers. About 22 to 23% of our present demand is already being imported. So that space is already there. So that, and I mentioned that maybe 1/3 of that is unavoidable because of the technology and the quality issues. So out of this 250, 235, 250 billion tons, 2/3 of it is anyway available for grabs. Coal India can grab it, private sector can grab it, and then coal production, coal demand is anyway rising. So, and at the same time, there is a pent-up demand because, imported coal is expensive and domestic coal was not there. So we imagine that there is still a lot of demand which has to be. So the market is larger than what you see right now. That is number one. Number two thing is that Coal India is sitting on large coal deposits. It has, it's well entrenched. It's a very old company. Its cash position is very good. It's debt free, and it's after all the government company. They are in a much better position to ramp up, coal production as compared to the private people who may now enter the sector. So we don't feel that Coal India is under any situation of loss of market share. There is only new market which have to be developed. And for new markets, we don't want to put Coal India into any superior position than the others. Let them compete, let the best man win.
So, Mr. Jain, what about the outlook on the quality of coal?
Look, quality of coal is a perennial issue. When you mine coal, you are removing overburden, which is, non-fuel matter. And in the last 3-4 years, there has been substantial improvement in the quality of coal because a third-party testing mechanism was introduced by the government. Now there is a CSIR lab called SIMFER, which takes samples, and whatever billing that is done by Coal India, that gets adjusted, on the basis of the actual grade, which is revealed once that sample is tested. And Coal India for the last several years now, since this method was introduced, has been giving discounts up to even 2,000 crore rupees per annum. And so that is a system which has to be tightened, day after day. And but anybody will accept that when there is private sector which produces coal, and there is plentiful of coal, there is a competition in the market for demand for clients, it will be good for Coal India. Their quality will also improve.
Right, sir. Thank you for joining in, telling us what the overall implications are of this privatization of coal.